Good morning, everyone, and welcome to this webinar. So I can see that people are still currently trickling in, so we're going to give them a few more minutes. In the meantime, I'm just going to go through a few housekeeping remarks. So first of all, welcome to this exciting webinar about connecting support and why your tenants are falling into arrears and what you can do about it. So you're probably familiar with this process at this point, but just to do a little audio check, can you all confirm that you can hear me if you're able to click on the little thumbs up emoji just to make sure? Yeah, fantastic. I can see them all coming in. Amazing, great. So we will be going through a few presentations and we'll be hearing from some fantastic speakers today. However, do feel free to ask your questions throughout. We will try to address as many as possible at the end during the Q&A. We've also got quite a few questions that you submitted during the registration process. So we'll prioritize the live questions, but we'll try to get to as many as possible. And any live questions that we didn't have time to answer, we will try to reach out to you. And if you're happy with that, to get you the answer that you needed. Now, the way to ask questions, if you look on the right-hand side of your screen, there is a tab there. And if you select the question icon, then that should allow you to send your questions through. You won't be able to see them immediately. They'll come over to us, the organizers, and we can assign them to the relevant speakers. Now, at the end of the webinar, there will be a short survey. So if you have a couple of minutes to spare, we'd be very grateful if you could answer it. And we will be aiming to finish by 11:45. Our speakers are all very good and they've all prepared their presentations great, so I don't think we should be going over time. You will be receiving the slides and the recording after this. And feel free to follow us on LinkedIn or on X. We're present on both platforms. And so that's it for the housekeeping. Now, for those of you who aren't familiar with policy in practice, I thought I would give you a little bit of context. So we are a software and analytics company, which is closing the unclaimed support gap using technology. Now, you might have heard of our missing out report. It's one of our largest reports. Now, the last one that we published was last year, and the next one is coming up very shortly. And that report identified that millions of people are missing out on about £23 billion of support each year. So what we've done is that we've built solutions that enable people and organizations to efficiently close this gap, mostly by identifying households that need additional help and be there to support them through data and technology. Now, I'm sure you're all very excited to hear about our speakers today, so we've got a fantastic lineup. First of all, we're going to be hearing from Richard Jones, who is from Policy in Practice, and he is going to be providing some context on the policy landscape, and he'll be explaining, giving a few more reasons why people fall into arrears and, looking at the issue of income volatility. Then after this, we will be hearing from Helen Burgess, who is Managing Director at Pocket Power, who will be talking about ways of collaborating and making sure that everyone is included, especially people in households who don't necessarily have access to digital or who do not wish to use it. After this, we will be hearing from Cheryl Bickerdyke and also actually Yvonne Smith. So they are from the Jigsaw Homes Group, or Jigsaw Homes, and they will be talking about the real-life impact of early intervention. And then after this, you'll be hearing from Ed Mcnamara, who is Software Account Manager here at Policy in Practice, and he will cover a few approaches to housing support. Okay, so that's everything for today's agenda. You can see it's quite packed, and so without any delay, I think we should start with Richard Jones. If you're able to join me on stage, Richard.
Good morning, everyone. Thanks for being here.
Of course. All right, the stage is all yours.
Okay, first slide, please. Thank you. So for low-income families, there's not much that's more important than housing. Stability, physical and mental health, financial resilience, community, educational outcomes, employment opportunities. All these things flow from secure, affordable housing. That's why income maximization and tenancy sustainment are so crucial. They're not just sector buzzwords, they're the key to supporting tenants across all these different aspects of their lives. And to do these things properly, we need to understand the nuances of these households' income. That means considering three things. One, the impact of sanctions and deductions. Two, the realities of income volatility. And three, the welfare reforms currently on the horizon. So that's what I'll be talking about today. Next slide, please. Starting with sanctions and deductions, or rather deductions and sanctions, since I'll actually be talking about them in that order. So deductions are made directly from benefits to recover debt owed to the DWP or local authority, for example, from an overpayment or an advance payment. There's also third-party deductions for things like utility arrears. And these deductions are taken automatically before any payment goes to the claimant, immediately reducing their available income. But how widespread is the impact of these deductions really? Well, our research found that half of all low-income households on universal credit are repaying debt directly from their benefit awards. For those in receipt of disability or carer-related elements of universal credit, that figure rises to 6 in 10. These stats come from a report produced by my colleagues Rory Ewan and Zoe Charlesworth, which I'd highly encourage anyone interested in this area to read, and a link will be made available to you in the chat. Now, there is a cap on these deductions, and as of April this year, the government introduced the fair repayment rate, which lowered that cap from a maximum 25% to 15% of the standard UC allowance. This is obviously a step in the right direction, but it's only a small one, because there's other kinds of deductions too. The bedroom tax, the benefit cap, local housing allowance limits, the two-child limit, and the fair repayment rate doesn't take any of these into account. And with so many potential sources of deductions, the cumulative impact is considerable. Households can see their income eroded by up to a quarter, and this creates rent shortfalls even in otherwise stable tenancies. And it's a feedback loop. Half of these households that have a housing support reduction from the bedroom tax or the local housing allowance also face debt deductions. These are families who often have no choice but to rely on debt to meet the shortfall in their housing costs. And that can very easily become a cycle that's very hard to break out of. We also need to consider managed migration. As people move over from legacy benefits to universal credit, income which has been stable, sometimes for years, is suddenly subject to change. Historic overpayments are often identified through the migration process, meaning more deductions. And even when this doesn't happen, the break in payment due to the 5-week wait for universal credit means over half of all claimants will need an advance payment. That's more deductions. So for many of these households, going into debt and accepting deductions to their income to repay it is an unavoidable part of the claim process. Let's turn now to sanctions. Sanctions are payment reductions imposed for failure to meet work-related requirements. And this can be up to 100% of the universal credit standard allowance. And indeed, we know that the majority of sanctions that are given out are applied at that 100% level. Sanctions are also not included in the fair repayment rate. And whilst they're not as widespread as deductions, their impact is enormous. Over 75% of sanctioned households that receive a housing element payment are already in affordable housing before their benefit is reduced. So for these families, sanctions push affordable housing further out of reach, increasing both their arrears and their reliance on debt to cover costs. Now, some sanctioned households do have the option of a hardship payment. But of course, this will need to be repaid via, you guessed it, more deductions. We also know that 81% of sanctions that are appealed are overturned, suggesting there's widespread wrongful penalties being handed out that are unnecessarily pushing people who are already in difficult circumstances even further into hardship. So what we see is the low-income families with the highest barriers to work, that's single parents, carers, households with disabled children, are the ones who are most likely to experience unsustainable financial pressure through this patchwork of different caps, deductions, and penalties. Next slide, please. Now, one of the ways that we can understand this financial pressure is as income volatility. So as many of you will know, universal credit is designed to respond to income changes in real time. Payment is made at the end of the month based on earnings during a month-long assessment period. But this design means that small changes in income can cause disproportionately large changes in the level of support, and on a regular basis too. You can see on the graph on the screen here a bit of what income volatility actually looks like month to month. So income volatility is describing how household income in one assessment period will increase or decrease compared to the annualized average income the household receives across the year. But that's a bit abstract, isn't it? What does this actually look like for claimants? Well, one cause of income volatility is pay dates not aligning with assessment periods. The consequence is 1 month's lower income isn't reflected in higher universal credit until the next month, and that delays payment of routine costs. And of course, that delay really matters when it's rent that's due, or food needs buying, or direct debits start bouncing. Because of course, these delayed payments can lead to penalties, fees, additional charges, which then just exacerbates that unpredictability and income volatility. And again, this isn't some fringe issue affecting a tiny group of claimants. About 1 in 6 universal credit households experience volatility solely because of this mismatch between their payday and their UC assessment cycle. 30% of UC households overall experience income volatility. 1 in 5 experience highly erratic income. So this is a big persistent problem that's fundamental to the design of universal credit. And fluctuating earnings also mean fluctuating entitlements to other benefits. So these fluctuations then exacerbate income volatility further, and round it goes. Housing providers then see the knock-on effects of this. Rent shortfalls, arrears, and ultimately broken tenancies, caused not by reckless spending or a lack of budgeting skills, but by a benefit system that behaves unpredictably. And the most serious consequences of this are for those families whose circumstances allow the least room for error. Next slide, please. And finally, we come to welfare reform. The stability of tenancies is inevitably very closely tied to the financial security of tenants. So the upcoming changes to disability benefits will introduce new challenges for housing providers, particularly for those whose tenants are already facing financial hardship. Now, a lot has already changed since the reforms to personal independence payment and the health element of universal credit were first announced, and there remains considerable uncertainty about what these changes will ultimately look like, as consultation processes are still ongoing. But the intention behind the reforms is clear: to bring down the benefits bill and reduce the overall number of people who receive these benefits. And that's being done through a combination of tighter eligibility, uprating freezes, and cuts to payments. So there's the immediate impacts. Households will lose entitlement and therefore income. Some payments will be lower from cuts, and multi-year freezes will mean household income won't keep pace with rising costs. But it's more than just that. If someone loses their PIP, their household will no longer be exempt from the benefit cap. That extra bedroom for someone who can't share on health grounds, that's now a spare room subject to the bedroom tax. Ditto the one that's used by an overnight carer. Speaking of carers, loss of PIP also means loss of carers allowance. In some areas, it means less council tax support. But the biggest change here is the plan to scrap the work capability assessment altogether, making PIP the gateway to receiving the UC health element. So losing PIP then means losing a chunk of universal credit too. And more than that, it could mean losing exemption from work-related requirements, which puts the household at risk of sanctions. Sanctions increase income volatility and necessitate hardship payments. Hardship payments need to be paid back through deductions. As I said before, it's a feedback loop. It's all interrelated. And that's why it's so important to understand income volatility, the way that it creates and exacerbates vulnerability for these low-income households. Now, for housing providers across the country, the likely impact of these reforms are increased rent arrears as tenants lose a significant portion of their income, higher demand for support services as families struggle to navigate this new system and manage their shrinking finances, and of course, greater risk of tenancy breakdown, particularly among vulnerable groups like single parents and disabled people. That's why we're talking about this, so that housing providers can act now, getting to grips with income maximisation, shoring up family budgets ahead of cuts and changes, helping people to understand their options, access support, and build financial resilience. There's so much that we can do. And the rest of our speakers are going to share with you some of the vital work that's happening already to support vulnerable households, boost their incomes, and cut their costs. So I'm going to hand over to them so they can start giving you some solutions to all the problems that I've laid out here. Thank you all very much. That's it from me.
Thank you very much, Rich. That was really helpful. Thank you for setting the scene. And it's really quite striking the way that single parents and carers are the ones that are hit the hardest by deductions and sanctions.
Oh, absolutely.
Yeah, and as you mentioned, for anyone who's interested in learning more about this, Ed has posted the link to the full report. It's currently in the chat. Feel free to download it. It's available for free, and you can take a bit more of a deep dive into this topic. Thank you so
Please
much,
do.
Rich. Yeah, and we will be seeing you again during the Q&A. Fantastic. So now we will be hearing from Helen Burgess, who is Managing Director at Pocket Power. Helen, if you would like to join me on stage. Hi, good morning.
Good morning. Thank you for having me.
Of course. Well, the stage is all yours. I shall go back into the shadows.
Thank you. Morning, everybody. Could we go to the first slide, please, Karine? So, the next one, please. So I'll give a bit of an overview to Pocket Power for people who don't know about us, haven't heard about us. So we set up in 2020. So our co-founders were working in the housing association space at the time, and they were very confronted by poverty premium, the fact that people who have the least pay the most, paying to be poor, this injustice. And what they wanted to do was find a solution for this. And they worked with housing associations and tenants to look at where could they provide the best support. And income maximisation is crucial. And there's some brilliant tools, Better Off Calculator, to do that. And there's also huge amounts of expertise and skill within the sector to do the benefits applications. What they identified was expenditure reduction as a really core kind of pillar to improving financial resilience. And when they looked into it, reducing household bills being key to that, the solutions that existed for tenants, well, they weren't designed with that demographic in mind. They were there's brilliant switching sites and things like that, but they require a financial literacy, a digital literacy. If English isn't your first language, they're quite challenging to use. So they decided to create a solution to that, as well to try and be a solution to some of these quite depressing statistics on the right. The number of people, 1 in 5 living in low income, 90% of that income, possibly more now, being spent on household bills. 80% of people not switching regularly. They're just it has improved a bit since COVID, but there is an inertia around it. It feels challenging and complicated. The number of people that are digitally excluded, which is still very high, and that's, you know, whether people can't, they don't have broadband, they don't have a device, or they don't want to. And then this famous, depressing but powerful figure that policy and practice have identified, if that 23 billion was in the pockets of the people that were entitled to it, life would be so much better for so many people. And as I said, we're sort of the other side of the coin from Income Max. We do help with things like pension credit and some of the benefit side, but really we're about connecting to those discounts, connecting to financial support that people aren't taking up yet. So next slide, please. So onto the happier, more positive bit is what the solution is. So we're very intentionally a phone service and as accessible as we can be. So we use a fantastic translation service. We offer three-way calls. So if people want to patch in a friend, family, support worker to support them during the call, and Relay UK if anyone is hearing impaired. So yeah, we try really we work with the more vulnerable, the sort of more hard to reach, I suppose, and we try and be as accessible as possible to them. And then we go through all of the household bills in a very short amount of time, which is, it is quite incredible. It's supported by very clever tech, which is able to quickly identify who's eligible for what. But examples, broadband, excuse me, I think it was policy and practice. I'm eager to see the new report, but in the last report, only 5% of people who are eligible for broadband social tariff are using it. It's, you know, at least 50% off every month. It's a crime. These things should be automated. The water social tariffs as well. I think that was 30% taking it up, but again, huge discounts immediately that we're able to identify that people are eligible for and immediately switch them over to them. And I should say as well, like baked into all of this is where we can do it on behalf of customers, we do, because we know if we just send links to say, oh, here's a great thing, have a look at it, lots of people don't, despite being in financial stress. So yeah, broadband, water, we can support people with looking for new white goods. We can support people to wipe debt off their energy and water. We have a lot of partnerships with utility companies where we can apply on behalf of customers and get these things fast tracked in some cases. We look at food vouchers. So are they a young family? Are they connected to the Healthy Start programme? Are they out of contract on their mobile bills and can they move them over to SIM only? Do they have a bit of money left at the end of the month and move to the Help to Save incredible 50% interest rate government account that anyone on universal credit's eligible for, as well as lots of other things. So we're constantly patching new things in. So the car finance compensation scheme, if anyone might benefit from that compensation, childhood trust funds. But the other thing we try to do when we have these people on the phone, we try to maximize the support as much as possible. So if our partners have additional support available, we can bespoke our script to, you know, different residents from different partners to say, well, some have digital inclusion programs where they're giving away free laptops. Some have free SIMs that will give people 6 months of free mobile phone usage. Some are connected to the brilliant tenants contents insurance schemes, and we can identify people that are interested in those. So when we have them on the call, it's trying to maximize the support as much as possible to put as much money back into their pockets as possible. So next slide, please. I'll just quickly count this. So when we were co-creating the solution, the big barriers to expenditure reduction were time, tech and trust. So the thought of even switching over your energy tariff, which is another big thing we're doing at the minute, trying to get people over to fixed tariffs, it feels overwhelming. It feels you're going to need to put aside lots of time and look at loads of different things online and not quite understand what's a kilojoule and a kilowatt and a this and that. And it's, you know, it creates that apathy, I think, whereas we can get through all of this in 30 minutes. And I really didn't believe this when I joined, but I've shadowed all the call operators and we do. So that's a huge stress off of the customers that we're talking to, and that we will do a lot of the applications for them. Tech being a barrier, as I said, some people don't want to use it. They're nervous about putting financial information into digital tools if they've been the victim of some scams or things like that. And then trust, very understandably, a lot of people we talk to have lost trust in services, in systems, and our team are extremely skilled at building a rapport and being able to build that trust, and they have someone to ask the questions to. What will it mean if I switch over to this tariff? How much money will I save? And all of our referrals come through partners, so there's already an element of knowing who Pocket Power is. Next slide, please. So it's actually increased a bit from this. So we're nearly at 2 million saved, which we're just delighted about. The key stat is it's £250 per person that we speak to per year. But also, really importantly, like obviously the money back in people's pockets for them to hopefully be able to pay back arrears and get their finances back in order is crucial. But these stats below, so a huge part of our mission as well, we're a social enterprise, is to empower people with the skills and knowledge to do it themselves. And 90% of people that talk to us feel more able to manage their bills and access financial support after speaking with us. 88% feel less stressed about their finances. And then importantly, these are newish, so about the last 6 months we've been collecting this data. 60% feel more able to heat their homes and 54% feel more able to afford their housing costs, which is obviously crucial to this topic of this webinar. So next slide, please. So on to our wonderful partnership with the Better Off Calculator. I joined Pocket Power a couple of years ago and was so struck by how many incredible services there are out there doing brilliant things for people. And I've always been a fan of collaboration over competition. Like, it's silly for us to all try and be everything to everyone. It's inefficient, it doesn't make sense. Let's bring our expertise and skills together and wrap that support around the needs of the end user, which is exactly what we've done with the Better Off Calculator. And it works for many reasons. So bringing like the kind of hybrid solution of the digital and the phone support together makes it more accessible. It saves customers time and stress. They don't have to repeat their story again and again because we already have that information, and it's very uncomfortable to talk about finances anyway. So that's huge benefit for customers. It streamlines the process for referring staff because they can, it's in one place, makes it more efficient for them. We're able to deliver more powerful outcomes for customers with the the Better Off Calculator results and the Pocket Power results that we're able to achieve. It's more efficient for us, which is always a good thing. So it takes us, we already have a lot of the information before we even go into a call, and it reduces silo working, which is always a good thing. So next slide, please. So how it works, this is a bit teeny tiny, so you might not be able to see it, but on the Better Off Calculator results page, Pocket Power will display for any one of our partners who have agreed to this integration to be able to book a call. If they press book now, they have to consent to their case being sent over to Pocket Power. If they don't, then they won't be able to go through the rest of the journey and book a call. So we know absolutely that consent has been given. They then book a call. We have their case ahead of the call. We're able to pre-populate our system, not get them to repeat their information over and over, do our savings, and then report outcomes as usual. Next slide, please. And this is just to give you a quick kind of overview of how the customer journey works. So when they book now and select a time, which takes like 30 seconds to make a booking, the customer then gets text reminders, email reminders, and an opportunity to reschedule. There's a link for rescheduling if they need it. We always try and make sure that it's never more than 5 days between making a referral and the call happening, to keep that kind of motivation to take the call. At the moment, it's only 2 to 3 days, which is great. We go through all the bills. We complete as many of the switching and applications as we can on that call. If we need to book a follow-up because we know we need to do a trust fund application and it takes a bit longer, or the customer might be having a problem with British Gas, does quite often seem to be British Gas, we can advocate for them. We can patch them into a call and we can work through the issue with the provider and try and reach a solution. They might be in their mobile phone contract for another 3 months, so we call them back 3 months later. But that's how the customer journey works. And then I think last slide is next, please, Karine. Yeah, just to provide a case study. So a gentleman that was referred to us via the Better Off calculator in March, and we were able to save him £540 a year by switching him over instantly to a broadband social tariff and finding a better fixed deal for his energy. I'll just read out the quote. So the process worked really well. It was simple and quick, and I appreciated not having to repeat all of my information to yet another service. I appreciate Sovereign linking these two services together to make it easier for us to access their much needed support. So the next sort of phase of our integration is exciting, that Pocket Power will be able to increase outcomes even more by connecting customers to some of the matches on the Better Off calculator results page, which will just be even more powerful, and we're really excited about. I would say, you know, going back to why is it people are falling into arrears, I mean, Richard set it out really powerfully. And from our side, what we see is, you know, the bill side, the cost of living crisis is getting worse and worse. And the pressure on budgets that aren't being offset is so huge. Water bills went up, I think 30%. Broadband's gone up, council tax has gone up, energy's going back up again in October. It's a really difficult situation for people. And the thing that is another challenge is awareness. You know, people aren't aware of the financial support. There's so much more than I ever realized before I started working for Pocket Power. People don't know about it, and it doesn't feel right that if you're lucky enough to have a referral to Pocket Power or go through the Better Off calculator, that you're able to access that support. But that's the way it is right now for many. Automation is the way forward, and I know Policy and Practice are doing some brilliant work with that. And just as a last thing to mention, we are able to offer our service for free to anyone aged 60 plus, because we've had generous funding from Royal London, where they're through their social impact fund, and one of their missions is to improve the financial resilience of older people. So I think Karine's got the link and can send that over to you, and I'd welcome everyone to take that up if you know people that need it. Thank you.
Fantastic. Thank you so much, Helen. I've just put the link in the chat for anyone who's interested or who knows someone who might be. And yeah, this was extremely insightful, and I'm very excited to see the future developments. I think there's going to be some great work that you guys are going to be doing. So exciting stuff ahead. I'm also going to be posting Helen's LinkedIn link in the chat if anyone would like to connect. And yeah, I think that's everything for now. Thank you so much, Helen. I'll be seeing you again during the Q&As. Now, and also if anyone would like to connect with Helen, her contact details are in the slides, which will be shared after this webinar. Now, I would like to invite Cheryl and Yvonne onto the stage from Jigsaw Homes. So, yeah. Fantastic.
Hi, morning.
Good morning. How are you today?
I'm fine, thank you. Yeah.
Amazing. Looking forward to your presentation. Okay, I shall go back to being backstage.
Thank you. Hi, morning, everyone. My name's Cheryl Bickerdyke, and as Karine said, I'm the Arrears Recovery Manager for Jigsaw Homes Tameside. So I thought I'd tell you a little bit about my role, and then I'll move on to the slides. So you want to do the next slide, please, Karine? Hi, so my name is Cheryl Bickerdyke. I'm the Arrears Recovery Manager for Jigsaw Homes Tameside. I currently manage the Arrears Recovery team. We are very fortunate here at Jigsaw that we have a money advice team that consists of 6 welfare benefit advisors and 2 debt advisors. And we also manage the early intervention team, one of the officers being Yvonne here. We've been very lucky to expand on that team. So just 2 months ago, we moved from 1 officer to 2 full-time officers, and we also have a full-time apprentice. A little bit about the early intervention role. So early intervention was devised a couple of years ago, about 3-4 years ago, to help our tenants at this point of sign up. So the process is that when a property has been allocated or a sign-up date has been allocated, we complete an affordability assessment using the Policy and Practice system, and we do a rent commitment as well. I'll tell you a little bit about the features and how we helped build new features on the policy and practice. So our journey began approximately 2 years ago, I think, Ed, if I'm correct. And we knew we liked the morals and the principles behind policy and practice, but we wanted to kind of add a few features that we felt we needed based on regulatory requirements, and also what we felt we had a duty to do as a landlord, really. So over that time, we worked really well with policy and practice. We built a new 2-tier UC system to help us with trusted partnership vulnerabilities, to highlight whether we can apply for direct payments and things like that. We also added some questions around vulnerability. So, for example, around mental health, any special requirements that the customer might have. What happens when we complete the affordability assessment? What usually happens during those calls and whilst we're asking those questions that are on the calculator, lots of things, lots of information is drawn out of those conversations. So, for instance, if somebody answers a question around mental health or debt, then what we do is we signpost straight after the call. So from the minute that customer signs that tenancy, we're in at the very start to help them sustain the tenancy and support them. The referrals can be anything from money advice referral, debt referral. We have a hardship fund here at Jigsaw, so we can make an application for a hardship fund, which gives them abilities to provide white goods, beds, things like that. We have our own domestic violence team within Jigsaw. So you'd be very surprised, because of the rapport we try and build very early on during that policy and practice call. Things are often disclosed to us that haven't perhaps been disclosed with the lettings officers when they've come to register for housing with us. So lots and lots of important information is drawn from those calls. We can refer to external agencies, whether that be Mind or budgeting advice. Sorry, bear with me, just looking at my slide. What we also do, so we do the affordability, we make the necessary referrals where needed, if needed, but we also have a hand-holding support for the first 6 weeks of that tenancy. So for instance, if it's somebody that needs to put a change of circumstances in for their universal credit claim, we will keep in contact with them to make sure that that's done, that we verify it. So again, it eliminates any problems at the start of the tenancy. We set up direct debits during that call. We do follow-up wellbeing calls just to make sure everything's okay. We also record any findings within our housing management system. So if, for instance, something is declared during that phone call, whether that be a mental health issue, addictions, we record it within our housing management system so that the service adjustments are held within the system. Should we need that information further down the line, should it reach a different stage of recovery, or another team needs to know further information regarding that tenant. So everything is held within the system from our intervention at the point of the call. So everything that we draw is held and saved, so we can support that tenant beyond the 6 weeks, which would obviously then would fall in line with the arrears recovery team should they go into arrears. I think we've touched on it already, really. We know the issues that a lot of our customers face, and signing for a tenancy is a lifeline for a lot of people. But as we've touched on already this morning, we know the problems they may encounter when it comes to benefit changes, personal situation changes. So what we did sort of very early on when we created the team, and we're kind of building on it all the time because things are changing with the benefit system within our communities, are very close-knit communities here at Tameside. So the service is also offered to mutual exchange customers, joint to sole customers, and death of tenants, where you've got one person remaining in the property. So we don't just use the policy and practice system for new tenancies, we use them for existing tenants, because what we're also aware of is that a change in income in a household can have devastating impact. We come across cases where we've got somebody perhaps living with mum and dad. Mum and dad have passed away, and this could be somebody in the 50s who's never ran a tenancy before. So the information that we can draw using the policy and practice calculator is vital to making sure that that person gets the right benefits at the right time in the right place. It helps us secure that relationship with the tenant, so we're their first port of call. So the phone calls can sometimes easily last 45 minutes. So we aren't just asking questions, ticking boxes. The questions generate really useful, important conversations. It helps build our trust with them and them with us. So for me, I can't kind of praise the system highly enough. We've seen a huge change over the last 18 months. I'm in the office all the time, so I hear the conversations. Just getting a case study ready, which I'll move on to a minute. I was speaking yesterday, and it highlights really the importance of the referrals we do, which, because we're so busy, we don't always see the end result. So the case study that I'm going to come to next was really nice to revisit and look at, because we know what we do makes a difference. So next slide, please. Yep, so the slide, the case I've got ready for you. So this was a case where this was a gentleman whose wife had passed away. It was a long-standing tenancy. Housing benefit was only in her name at the time. Wife died, and he was very ill at the time, and he really didn't know where to turn. So rather than just transfer the tenancy to a joint to sole, the lettings team referred to our service. So we completed an affordability assessment using the policy and practice calculator, and again managed to draw lots of information, which again otherwise just as a joint to sole process, if you didn't have this process in the middle, it's scary to think really where this customer may have ended. Really, he was obviously grieving, he was very low, he was also physically quite ill himself. So off the back of the conversation we had during the policy and practice calculator interview, we completed a referral because we very quickly highlighted that there were benefit shortfalls for this customer. So in essence, there were things he wasn't claiming that he should have claimed and wasn't aware of it at all. And then in the middle of him signing up, he was admitted to hospital. So some of the follow-up work we kind of did whilst he was in hospital on his behalf. So if you want to move on to the next slide, please. So as you can see there, I'm not going to kind of read it all out to you all, but as you can see, as a result of the early intervention interview and the referral we did to our own money advice team, as you can see, we were able to increase his personal allowance. We managed to secure full housing element, the LCRWA attachment. We managed to get him council tax support and a bereavement support payment, which was a total impact of £22,716, which in this gentleman's words was life-changing and made one of his darkest times a little bit lighter, which is what we're all here to do. I think we all agree that we're all on this webinar because we want to help people sustain the tenancies, lessen the impact on arrears. If there was a miracle cure, then we would all be doing it. But I truly believe that the right support at the right time, and for us, we're a strong believer in when they're signing up for that tenancy, let's get it out there, let's talk to them. And then if it isn't at that point, but 6 months down the line, they have a life change or a circumstance change, we've drawn lots of information from the start around vulnerabilities. We've given them that trust and that rapport that they'll reach out to us early on and say, I had a change. So yeah, so that's me. I could talk all day about it because I'm very passionate about support and what we can do. And there's probably lots more we do, which I might be able to have a chance to talk to in the Q&As, but that's a snapshot of how policy and practice has helped us. So thank you.
Thank you so much, Cheryl. And this is incredible when you think about it. You know, £1,800 a month, or almost 900. It changes your life. You know, it's incredible.
Yeah,
and I'm sure that's and I'm sure that's not the only case. So amazing.
Oh no, there's lots like that. Yeah, lots.
Thank you.
Yeah, of course. Thank you for sharing that with us. So sorry, I skipped a little bit ahead in the slides there. I didn't mean to. Ed, if you would like to join me on stage, I believe we will be hearing from you now regarding new approaches to housing support. Hi.
Hello, everyone. How you doing?
Good.
So yeah, as you may have seen in the previous slides with Jigsaw Homes, I went to visit them and heard some amazing stories and how they're using it, and I've been working with them quite closely to develop some of the new features, as well as others. But yeah, just every time I meet Jigsaw Homes, I think I spend the first intro meetings talking for like 20, 30 minutes about how everything's going. We get on so well, but then the next 20, 30 minutes is always just hearing some great insight as to how we can change the product and develop it specifically for housing. I think the challenge as an organization like policy and practice is we as developers and analysts like Rich, we sit down, we think how the calculator should look, we design something that we think is brilliant, but it's actually when you guys end up using it and then telling us how it's supposed to work, now we can change it and make something completely new. We never thought about the affordability assessment feature until Jigsaw said this would be really useful, this is something that's a challenge. So if you are an existing client, you're on this call, there seems to be a lot of you on there, please make sure you jump on and just have a chat with us and say, actually, the calculator should be doing this because we love to innovate and we love to do things a little bit differently, not just a benefits tool. And that feature that Cheryl was talking about was the affordability assessment feature. It's actually a free feature, part of the calculator, as long as your assessment criteria isn't absolutely crazy. So if you're already working with us, drop us a message if you want it. It's free. If you're not, obviously you need to acquire the Better Off calculator, and I'm more than happy to take you through a demonstration of what it looks like. But essentially, here's a quick snapshot. You give us your criteria on affordability assessment, and what we notice is most housing associations have it on like a separate Excel sheet, which means you're double keying information, repeating things, and having to have another tool on the side and not having immediate impact when you get your results. And so what happens is we model it in, and then we give you a red, amber, green rating according to that property. We'll recommend the actions that you've predetermined to us about like what to do next. And then we'll be able to say, well, this tenant perhaps is not unaffordable, is like the property's unaffordable for him, according to your guidelines, but he's missing out on £1,890 worth of benefits a month. So this is where you can go claim it, and this will push him into an affordable standpoint, and also highlight any vulnerabilities that you've identified. If you go to the next slide, please, we'll go on to our universal housing form. And in fact, that conversation with Cheryl and her team ignited a new thought in our process. So once we actually looked at what housing associations do, what we found was that a majority have a lettings form done on a document they've created, like a Word doc or an Excel sheet or a Microsoft form. And then you have an Excel sheet for your affordability assessment. You probably have a benefit calculator, which maybe ours, one of the free ones on gov.uk. You have an income and expenditure tool. And then you'll have a system that you save it in, all the debt advice in one area, like Advice Pro. And then you have another system that goes into housing management system, which is incredibly disjointed. And there's loads of different silos of support. So what we did is just put it all in one. And it sounds really simple to do. It was quite complex. Simple ideas often lead to complex solutions, but we built it, and it's fantastic because it means that everyone in the lettings journey is doing income maximization pre-arrears, so before someone falls into rent, so we're being proactive. It also means that every time someone comes to the income team, they've got a case ready for them. So it's not a case of, right, let's put all your information in a calculator. It's open up what you've already done. What's changed? And that way you're saving loads of time in situations where tenants are in massive crisis. Pushing towards a preventative approach, because income maximization is now incorporating the journey all the way throughout, from lettings to income to even if it goes to collections, there's some type of support pushed through. What also means that data is being collected at one point, and that means you can have more insightful reporting. Everything's pulled into our system. We've got a fantastic reporting dashboard, which basically analyzes your demographic, analyzes your impact, so you understand what should you be doing next in terms of take-up campaigns, and also reporting to your board and trustees about what the fantastic work you're doing is. If you go to the next slide, please, Karine, what we'll be talking about is where that universal housing form then took us. So what we're trying to do is not just be a benefit calculator. As I mentioned, we're constantly innovating, and the way we're doing that is trying to solve the issue that you're having to repeat your information. Telling me once is the biggest desire we've heard from our end users and from customers and clients from other organizations. So we've created a feature called Apply Once, where basically we're collecting so much rich information. There's so many great organizations out there, like Pocket Power, for example. Helen has been speaking today, and they do some fantastic work. If a tenant's already told you it and taken the time to open up about something, especially if they're going through a mental health crisis associated with debt, the last thing you want to do is constantly repeat their story. So what we do is upon their consent, share it to the right organisations, like the fantastic work that Pocket Power do, like work that Lightning Reach do, where you can get their grants checker in our calculator. We connected with Advice Pro, so there's a full integration built in with that. And we can triage with other organisations like Citizens Advice, so you get a direct referral rather than have to go through the whole journey again. And the next part that's also allowed us to do is now start to think about how do you get the money into people's pockets, because we're great at saying you should be getting a water social tariff, but what we want to focus on is how do we actually get it to that person, because then they have to go do another 30-minute application. What we realized is we collected most of that data already, so why can't we just share that rather than having to start again? Anglian Water and Northumbrian Water were pioneers of this feature, where essentially we've got the postcode data, we know you're a customer, we've got their social tariff modelled in, so we know if they're eligible or not. And what you can do is just apply directly for our tool, which means a 30-minute application is now going to take 3 minutes. And that's the journey that we're going to down, is just trying to get the data of customers in need of help to the organisations that actually give it to them. And if we go into the next slide, please. This then goes into what we talk about, how the systems we develop for housing. But what we want to really focus on is how do we collaborate with sectors. Collaboration is a big sort of project of mine. It's been my sort of focus in the last couple of years. How do I connect utilities and housing together? How do I connect the amazing work that Pocket Power does with our calculator? But what we're hearing more often is how do housing associations connect with local authorities and have a more proactive approach using their data? It's something that's fairly new. We haven't done many of these cases, but it's something we're really keen to explore. So if you're a housing association that works with us or with other organisations, do reach out, because we have a side product outside the Better Off calculator called a Lift dashboard, which is used by local authorities. It's an immensely powerful tool that takes the administrative data sets for benefit applications from a council, churns it through the policy engine, which is our calculator, and then on a dashboard just breaks down household level information. And you can see like a tiny little screenshot where you can start to filter and analyse your data. And some use cases we have done before with a housing association has been they gave us their rent arrears data. We matched it to the data we have on Lift and the low income family tracker, and be able to use that to make insight for data-led decision making. So for example, we'll be able to go, here's a take-up campaign. We go, here's everyone that we know that's missing out on pension credit and is your resident. Go speak to them, get them to apply for it. So rather than you having to send out a pension credit marketing email and hoping the right person applies, or people think they should be getting it, they actually shouldn't be getting it, we just send you a list of those who need it and are actually eligible. Further on, you could then do it for, if you've got a funding pot set aside for those rent arrears, why don't you match those housing association rent arrears with those in perhaps council tax arrears? And then you've got a core set of households that you know are in cyclical debt, and then you can provide, perhaps some discretionary funding pots to be able to help them. So what we're really trying to do is A, connect you with other organisations, B, make data-led impact, and C, take a proactive approach. Rather than reacting to someone's coming to your door asking for help or waiting for them, let's get to them first, because that's where you're going to get the biggest impact. I appreciate there's loads of different things, but it gives you a bit of a taste of the work that we're doing with Rich, with Jigsaw, with Pocket Power, and with others, in order to just do something different, because what has been working in the past is no longer working now in the cost of living crisis. I believe that's the end of my slides there, Karine. I believe we're next on to the discussion.
Yes, absolutely. Thank you, Ed. This was, again, very helpful. So now if all of our speakers could join us back on screen, that would be lovely. And if anyone, in the audience, if you have any questions, feel free to submit them now in the question tab that should be on the right-hand side of your screen. We have already received a few questions. So I think I've already assigned this one to you, Helen, but in case, just if you want to go over it again over video. So we've got Sarah Methven, sorry if I'm pronouncing it wrong, was asking whether the Pocket Power link is for professional to use, or if it can be given to tenants. And then
was that for the wise savers, the 60 plus?
Yes.
Yes, yeah, no, it can be given direct to tenants, definitely. We tend to find if it's come through a kind of a referring partner, engagement can be a bit better. There's maybe a bit more accountability to kind of take the call, but you're free to share it with whoever you think might benefit from it.
Okay, Great, thank you for that. And we had also Michelle Davis was asking whether you have to use the Better Off calculator in order to refer to pocket power, and what if they've already done an income and expenditure on their own template, and also I believe there was a follow-up question to this, which was what do they have to do to get pocket power on to the Better Off calculator? Now, Helen or Ed, I don't know who would you like to answer this?
I could quickly do a quick response first, but Michelle, I can see you are from Gateway Housing Association, so you are a client of ours. Essentially, you can freely get the Pocket Power integration into the calculator, but you just have to work with Pocket Power, and I'll let obviously Helen take that part of the question. But if you're doing the income expenditure on our calculator, you can then actually share the data on that tenant to Pocket Power, so they don't have to go through the whole process again. But yeah, I'll let Helen take into the conversation of how you get to Pocket Power.
Yeah, so if we've got anyone on the call that is currently working with both Policy and Practice Better Off Calculator and Pocket Power, then that integration is free. Like it's been funded, so you can turn that on for free. But we do need to be working with both companies. So yeah, happy to have a call with anyone. We tend to contract annually with partners and agree a kind of number of referrals to be used over the course of the year. And the cost of that referral depends on the kind of volume. So obviously, if it's a high number of referrals, then the cost is a bit lower. If it's a small number, then it's more. With some small charities that we work with, we are able to kind of look at it as a retrospective use and make get a contract in place and take referrals, but they're much smaller number and more ad hoc, and we can kind of not have to commit people to a whole year's worth of referrals if that isn't something comfortable. So super flexible model, and happy to talk to anyone about their needs and what a partnership might look like.
Lovely. Now, we actually got several questions from people during the registration process, and I think those are both for Jigsaw Homes and for Pocket Power. So, Cheryl and Yvonne, if you wanted to go first. So So they were essentially asking what are the most effective ways to support residents to pay their arrears without risking poverty or eviction. Now, I know that we've already broadly covered quite a bit of that during the presentation, but if there's anything else that you wanted to add in this regard?
Yeah, so I would say income maximisation really, which again is kind of part of what we do at early intervention stage, but obviously throughout the life of the tenancy. We have a sustainability team here at Jigsaw, so we can refer in to our sustainability and wellbeing team, so they can look at other ways of maximising income, because obviously if they're already on the maximum income, the money advice team really, if they've exhausted their resources and they're already on maximum income, it's about looking at budgeting, similar things to what Helen said really. We're constantly doing, we're keeping a track of any benefit changes, any policy changes. We have regular monthly comms campaigns, so we're very lucky that we have a comms officer that's dedicated just to my team really, the income team. So we do regular comms campaigns, whether that be around the pension credit uptake that we had, the migration to universal credit. We will target maybe 21 to 45-year-old males, because that tends to be where our arrears are highest sometimes. We might do a campaign reaching out to single parent households. So we're always looking at campaigns, really reaching out, constantly letting people know that we're here if we can help them, referring where we need to do, and just keeping those lines of communications open, really.
Yeah. Helen, was there anything else that you wanted to add in this regard?
No, I think it's the income max and expenditure reduction. Bringing those kind of halves together, and as said, it's like the comms, keeping that communication going. So we will sometimes be privy to information on our calls that perhaps the housing associations aren't quite aware of, or we identify something outside of maybe these brilliant tools that are available that can be taken forward. And it's just having that constant communication with the referring partners and making sure that the outcomes are just maximised as much as possible for the people we work with.
Yeah. Yeah, and interestingly enough, we also had quite a few questions regarding what are the key impacts of current and forthcoming welfare reforms, including PIP and universal credit migrations on tenants and arrears. And Rich, I was wondering if that was something you would like to answer?
Yeah, of course. And I've outlined a little bit of kind of what we can expect to see, but also, as I'm sure we all know, following the various stages of chaos we had around the new welfare reform bill, remains a lot of uncertainty. And that, I think, is the thing which I would encourage everyone to be doing at this stage. This is the thing that you can do immediately, is start talking to your tenants, because a lot of people will find this uncertainty paralyzing. They will be scared, they will clam up, they'll stop opening their post, and they may not engage with support until suddenly one day the benefit payment they're expecting doesn't arrive. I used to see this all the time when I was doing frontline advice work. And yeah, the thing that I would really encourage is engage with your tenants, help them understand what's going to happen, talk them through their options. Most importantly, when these changes do start to come down the line over the next couple of years, we're going to see a prolonged period of disruption. Give them a response, even if that response is just let us know and book an appointment. Once people know that there is somebody who understands, who can support them, and they do have options, it gives them that confidence to actually try and engage with this stuff. So we're going to see big changes, and certainly with managed migration, but also with the upcoming changes around PIP and all of the kind of shifting with UC, a lot of what we're going to see, as I mentioned before, is disruption for people who have potentially had years worth of stable benefit income, who aren't used to having to think about this kind of thing, who are suddenly going to find themselves in a situation where actually they're struggling and they need more support. So be proactive and engage with them. That's the main thing that I would really encourage.
Yeah, and I mean, we've discussed in this webinar that there are many different ways of engaging with them and to try to not let people fall through the cracks, especially the ones who might be excluded by digital ways of communicating. Um,
Absolutely. There are so many more options out there than anyone ever thinks they have, as this webinar demonstrates brilliantly.
Cheryl, yes, you wanted to add something?
Just me. That's why we always think the early intervention is so important, because the rapport that we build with that tenant at the very beginning, it almost instantly feels like they've got that support from the beginning. Now, not necessarily are we looking at someone who's been in a tenancy for 20 years, but we're now starting it now. Obviously, since the early intervention department started, we can build that rapport. So we generally do have tenants coming back to us, even though generally we don't deal with them after a certain amount of time, but obviously because they have that relationship with us, it builds that confidence for them to come back and get that help, rather than suffering in silence, really. So that's where, like, I believe the early intervention from the get-go is so important. It gives that tenant some sort of relief that there's somebody there, that they can turn to in struggle. So
Yeah, yeah, absolutely. And sorry, quick question. If ever you're not currently answering a question, if you're able to mute yourself, that would be perfect. Sorry, it's just I'm aware that I've got a bit of background noise in where I am, so sorry about that. I'm trying to do the same thing. We've got another question from Sarah Knight, and she is asking that she's saying that she's interested to hear if the Better Off calculator can provide reporting on the number of referrals, outcomes, etc., and tracking of cases. Ed, if you would like to answer this question.
Yeah, so we have quite in-depth reporting insights in terms of usage statistics, and we can help work with you on campaigns. So there is quite a lot of reporting insight. We kind of break down everything that's been put into the calculator and also the outcomes of it immediately. So we'll tell you how much benefits did you identify, how many people did you engage with, of those that you engaged with, how much was unclaimed, and then what was the impact of those that were unclaimed. But also we can start to look into, tracking campaigns. So once you put stuff on your website, how is it being used? How many people get into the results page? What type of demographics are you working with? Where are they coming from? So, are you getting a lot of people with more than 3 children? Are you getting loads of households living with disabilities? Are you getting those high propensity cases from areas where, you might have a lot of stock in Liverpool, for example, or Merseyside? You can then start to track that. So there's a lot of insights we can provide, and that was recently developed. So I'm more than happy to show anyone that wants to have a look at it.
Lovely, thank you so much. On a side note, I've also seen that there's been a few comments from people who are having technical issues currently, so I apologize for that. It can be caused by different things. However, don't worry, we will be sending you a copy of the slides and the recording. So if anyone else has a question related to that, don't worry. Now, going back to our other questions, there was a question here from Lisa Stocker, and she was asking, how can we increase income when the government is cutting funds and benefits, or are we just being hopeful? I don't know who would like to answer this. Rich, did you want to give it a go?
I'm so sorry, I was answering another question in the chat. What were you saying?
Sorry. This one was from Lisa Stocker, apologies. And she was asking, how can we increase income when the government is cutting funds and benefits? So if there are any other ways, are we just being hopeful? So I know that you mentioned earlier that, just reply to people, be there for them. Is there any other advice that you might have?
Yeah, and I mean you're absolutely right. There's definitely an element of just doing as much as we can for people in the face of cuts and rising costs, but that kind of makes it all the more important. And the flip side of that is obviously we do know that there is a huge amount of unclaimed support out there, 23 billion in unclaimed entitlement, all of the wonderful stats from Helen's presentation talking about, vast amounts of social tariffs going unclaimed, people don't switch. There is stuff that we can do, but so much of it is about early intervention to stop these situations from escalating and spiraling out of control. If you can keep somebody at the level of just about surviving, and that's not what we should be aiming for, but if you can keep somebody at that level and keep them out of a deficit budget, out of relying on debt to cover costs, then you can stop their situation from reaching that point where it just spirals down and down. Things are difficult. There is not as much support available as there should be. But again, that's what makes it all the more important to access all of the possible support that is available.
I think I'd just add like the automation, the fact that this stuff should just automatically reach the people that are entitled to it. I think the work that you've done with Thames Water, it might be worth mentioning that. It's absolutely brilliant. And, the sooner that can be rolled out, the better, because then there isn't this sort of, postcode lottery or luck if you're, referred into the right services. It's just, yeah, I think it's brilliant.
Yeah, I'm happy to go to it. Oh, sorry, do you want me to go on to that, Rich? So in terms of the Lift campaign, I think also someone's asked about Lift in the chat about how housing providers can sign up to it and whether or not local authorities need to do it first. So it's a local authority product simply because of the data sets they have. However, what we're trying to do is collaborate with other providers. So housing providers collaborating with their local authority where they have stock. And yeah, to explain how it kind of works, and Thames is a great example. Thanks, Helen, for raising it. Is Thames Water have like basically a target to be able to help people to get onto their social tariffs, and they want to approach households that are like hidden pockets of poverty, people they're not engaging with, they're not coming towards them. So what we did was we took a target council, which I think was Richmond and Wandsworth Council, and we matched their data to their Thames Water's arrears data, and then told them everyone who was missing out on a social tariff. I think it was around 1,200 households were automatically enrolled onto a social tariff where they just switched it on and sent a message saying, your bills are cheaper. So rather than have to go online and go into benefits calculator, figure out if you're eligible and then go apply for it, we just sort of just gave them the money, which is something we're really hoping to push forwards and keep going down that route. They fantastically, because how well the project went, greenlit that across London. So we're doing it with 18 local authorities where they have the highest amount of water is, and the impact is likely to be over £10 million. So it's the way forwards, being more proactive and collaborating, and there is help out there. It's just how do we work together in order to achieve it as best as possible.
Yeah, Helen, you wanted to add something? I can see you've got your hand raised. Oh, okay.
I wanted to do the clap emoji, but
yeah, those results are amazing, and the further we can continue, with auto enrollment, the better, really.
I'll just come in very briefly, just to say that this is a part of I think the thing that really defines all of the work that we do in policy and practice, and the attitude that kind of comes from our kind of most active and successful partners. the benefit system is entirely reactive, and that's not the way it should be. And everything that we're doing is about trying to make that system more proactive, targeting support at people, offering it to them, linking them up, all of the apply once stuff that we're talking about to cut out that duplication and that expectation that somebody should just know what support is out there, if they're eligible, how to access it, and then to actually act on that stuff. So yeah, everything that we're doing is about trying to move to this more proactive model. And I mean, the benefits of that speak for themselves.
Yeah, agreed. I think so. We've got time for possibly another 2 questions. So we did get quite a few questions around the same topic that can be sort of grouped together under the idea of, how can we better identify and support vulnerable tenants, including those with complex needs or disabilities. Now, I'm not sure if you wanted to answer this question or.
Yeah, I think the approach that we kind of pioneered with Jigsaw Homes is trying to incorporate more systems into one place. You can catch someone on an Excel sheet, but you've got to make sure your referral pathway to getting that support is better. So if you're doing affordability assessment on an Excel sheet, rather than just saying to this person go speak to money advice and they have to start all the journey again, they probably won't share everything. That's a disconnect, so they're not likely to get the outcomes. But also make sure that in your pre-letting stage you're doing as much as you can in advance, rather than trying to do it afterwards. So please make sure if you are using our benefit calculators or any of them out there, get it in the letting stage and make it as easy as possible for your advisors, but also your tenants to go through that journey and catch those vulnerabilities early on.
Cheryl, Yvonne, I didn't know if you wanted to also answer this question or add anything to what Ed was just saying.
Just to I mentioned it earlier, what we do is we capture it within our housing management system. So we've got a tab now, which is a service adjustment. So we've built that into securely within our housing management system. So any information that's shared with us is logged within our housing management system. Should we need to check, so that's checked upon every stage, whether it be arrears recovery, ASB, whatever the aspect of the tenancy might be. All that information that we draw is held within the housing management system. So we're aware of it. It determines how we approach a customer, perhaps what support they might need before we continue. So I would say really it's a case of holding that data. It's really important that if those things are disclosed, if you can possibly, you need to retain that information really, because you need to know your customers. You need to know their needs really.
And that comes from using policy and practice, because then we're identifying what comes from what the customer is going through, so that so then we can put that data on the housing management system then. But obviously if we didn't have that kind of that part of the process, we wouldn't be able to identify it. So again, that's why it's really important.
But even if it's not included in the policy and practice, I would say for any arrears recovery or housing management, if you've given that information at any time of a tenancy, even if it's your call centre, if you can log that information somewhere within your housing management system, you've got it. Yeah. So it's not just at the stage we've been talking about today, it's at any point. If that information's shared, try and retain that information if you can.
Yeah, absolutely. And it often all comes down to the collaborations that you're able to put in place. And there are a lot of organizations out there that are doing amazing work. And okay, so I think we're coming towards the end of this webinar. So just before we actually close, I just wanted to ask each of you if you had some key takeaways from today, anything that you would like to share, like something that really summarizes things from your point of view. So yeah, I don't mean to sort of just throw someone into the spotlight. So whoever would like to go first.
I would say oh, sorry, Helen, you go.
I think Richard's slides on the income volatility that was really powerful for me. I hadn't seen it presented that way before, and really does hit home on why it's very difficult for people right now, but kind of reassuring that this is the way the kind of sector's going with this, wrapping around people's needs, trying to be as streamlined and collaborative and as efficient as possible is very positive. It's a really difficult time for people, but there's lots of good stuff going on. So yeah, kind of difficult and optimistic at the same time.
Yeah. What about you, Yvonne, Cheryl? Do you have any key takeaways from Jigsaw's point of view that you would like to share with the audience for them to take home?
I think for me, Rich touched on it as well, is engagement. Always be looking at new ways. It's getting harder and harder to engage. I think we'll all agree with that. So we're always looking at new ways, different ways, being open-minded. Any engagement is a positive engagement. And keep learning and keep talking. Liaise with your colleagues, because I think different teams within housing can have different priorities. We've all got one main priority, and that's to help people sustain their tenancies and have safe and happy lives, really. So just keep learning and keep, yeah, just that.
Amazing. Rich?
Yeah, I mean, I think it's the key takeaway from my presentation really is your customers, your clients, your tenants, whoever they are, you have to understand their income. You have to understand what the risks are, what the potential options are for maximizing, for reducing costs. And as we've seen today, there's so much happening. There's so many good tools out there. And yeah, the kind of the kind of wonderful focus that we're seeing on kind of collaboration and bringing tools together and integrating stuff. That's the main reason that I feel hopeful at the moment, is because, things are tough, things are going to get tougher, but actually we don't just have to sit on our hands. There's lots that we can do. There's lots that we're already doing. And anyone who wants to get involved and engage with us over that stuff, I would really encourage you to do it.
Yeah, agreed. And Ed, did you have any words for the
Yeah,
end?
I mean, very, very similarly, I think it is quite tough, and I've been a policy practice for the last 5 years, and things have noticeably gotten worse since I first joined the company, and I joined during COVID. So, I mean, what makes me happy and what makes me see light is the collaborative campaigns and speaking to wonderful organisations like Pocket Power and seeing the amazing work that organisations like Jigsaw do. I mean, I spent time in their offices and just seeing how the early intervention officers work and the stories they had and the passion they had. That's what's going to solve this issue. It's the collaboration between people who are passionate, making it like a difference. And hence why we're here talking on this webinar and trying to share the best practices so we can work together and figure out, how do we deal with this tough situation.
Yeah, agreed. Well, I believe this brings today's webinar to an end. Thank you so much for those, last words and key takeaways. And also thank you for, coming on board with us and taking the time to share all of your insights. If anyone in the audience, if you have any questions or you're keen to collaborate, feel free to book a chat with us. You can use the QR code that is currently on this slide, or I've also just posted the link in the chat. We had a few questions today regarding the impact of disability benefit reforms, and actually our next webinar is going to be about this. So if that is a subject that is of interest to you, do feel free to sign up. It is available on our website, on our socials, and there is also a hyperlink in the slides. Now, once again, heartfelt thank you, Helen, Cheryl, Yvonne. This would not have been possible without all of you, so thank you so much. And obviously also Rich and Ed. I hope you all have a great day. We're a few minutes behind time, but I hope that was okay for everyone. And as mentioned, the replay and the slides will be shared afterwards. Thank you so much, and I hope you have a great day ahead.
Thank you. See ya. Bye.
Bye.